The war with the SEC is largely won. The legal clarity is undeniable. Yet the price of XRP remains coiled, a predator waiting for the final signal to strike. This is the moment of supreme tension. The tourists have left, the meme coins have burned out, and all that's left are the true believers and the institutional giants moving silently in the shadows. They're positioning for the next phase of global finance, a phase built on the very rails Ripple has been laying for a decade while the world was distracted. What they understand, and what the market has yet to price in, is that XRP's story is no longer about a lawsuit. It's about tokenized real-world assets, a multi-trillion-dollar market that needs a bridge. It's about Ripple's expanding international dominance. And it's about a single, approaching catalyst that could render every price chart, every analyst's prediction, completely obsolete overnight. This script is for those who feel that tension. For those who understand that what we're witnessing isn't a lull. It's the deep breath before the plunge. They laughed. They said it was dead. That XRP would never come back, that Ripple was finished, that the SEC lawsuit was the final nail in the coffin. And yet, here we are. It's June 2025, and XRP is not just standing. It's advancing, evolving, expanding, and being positioned in a way that few people truly understand. But before we get to what's coming, and the single catalyst that could change everything by Christmas, we need to talk about where XRP holders have been. Because if you've held XRP through all of this, you've felt it. The frustration, the doubt, the anger, even the shame. You've watched other coins pump and dump, ride meme waves, hit all-time highs, and crash again, while XRP just sat there, shackled by regulatory warfare. You endured the delistings in the US. You watched as Coinbase pulled it. You heard the FUD. You saw mainstream YouTubers clown on XRP holders, calling it a banker's coin or the boomer token. Everywhere you turned, someone was telling you to sell, to move on, to give up. But something kept you here, because deep down, even beneath the lawsuits and the slander, you knew XRP wasn't just another hype coin. You knew it had real tech, real partners, and real-world use cases, even when the market refused to price it in. That's what makes XRP different. While other projects scrambled for relevance, Ripple was signing deals with the financial authorities of entire nations. While other teams promised the world with vaporware, Ripple was powering live, multimillion-dollar payment corridors from Japan to Mexico, the Philippines to the UAE. While the media buried it under SEC headlines, Ripple was expanding its Ripple Payments network and onboarding financial institutions you've never even heard of. Yet, the price didn't move in step. That's where the pain is for most XRP holders. It's not that they don't believe in the tech, they do. It's that they've been gaslit by a market that rewards noise over substance. A market that forgets Ripple already secured a landmark victory against the SEC, confirming XRP is not a security on secondary markets. A ruling that gives XRP more legal clarity than 99% of crypto. A market that continues to ignore the sheer volume of institutional liquidity Ripple is preparing to unleash. But what if I told you that's about to change? What if I told you there's one event, one strategic shift that's quietly building behind the scenes, and when it hits, it won't just send XRP back to previous highs. Could completely reprice the asset class. And if you're holding even a moderate bag when that happens, you could be staring at life-changing wealth before the year ends. We'll get to that. But first, let's make something clear. XRP has been suppressed, not failed. There's a difference. This isn't a coin that collapsed from within. No rug pulls, no dev scandals, no implosions. This is a project that's been strategically suffocated by regulatory gamesmanship, even as its utility continued to grow. And yet, XRP never left the top 10. Never lost its network. Never stopped shipping. That's not luck. That's fundamentals. And fundamentals don't stay ignored forever. Especially not when the political tides in Washington are turning. Especially not when financial institutions are desperate for a compliant on-ramp to tokenized real-world assets. And especially not when major legislative frameworks like the Financial Innovation and Technology for the 21st Century Act, FIT 21, are bringing the U.S. closer to regulatory clarity than ever before. That's the event we'll break down next. Because this isn't hopium. This isn't a what if. This is something Ripple has been engineering for years, and it's almost here. But before we get to that, if you're still holding XRP through everything, subscribe right now, because the mainstream won't talk about this until it's too late. While most retail investors were distracted by meme coins, NFT cycles, and influencer drama, Ripple was building something behind the scenes that almost no one in crypto media was paying attention to. And now, in mid-2025, it's close to detonation. This is the hidden fuse, and when it ignites, XRP won't just move. It could detonate into a utility-driven price discovery phase unlike anything we've seen before. Let's break it down. Most people still think of Ripple as a cross-border payment company. But Ripple is no longer just facilitating transactions between banks. That's the old narrative. That's 2017. What Ripple has quietly been doing is positioning itself at the center of global tokenized liquidity. A new digital financial stack where XRP is the fuel that makes everything move. Clue number 1. Ripple's institutional network is mature, and you're not in it. Most people don't realize this, but Ripple's institutional liquidity hub, now known as Ripple Payments, is a mature, closed network. It's not for retail speculation. It's for enterprises and financial institutions only. It allows them to tap into on-demand liquidity without friction, using XRP as a bridge asset behind the scenes at scale. This isn't theory. Ripple Payments has been live and expanding for years. It connects to regulated crypto liquidity providers, stablecoins, XRP, and fiat rails. It allows global settlement in seconds, and it's being rolled out with partners under non-disclosure, meaning you won't hear about the biggest deals and headlines until it's too late. While you were watching price charts, Ripple was onboarding institutions. While XRP was moving sideways, Ripple was bypassing public exchanges entirely, building a financial backend that retail can't even see. Yet, this is the quiet before the flip. Clue number 2. The trillion-dollar RWA market is here, and Ripple is already integrated. You've heard the buzz around tokenized real-world assets, RWA stocks, bonds, real estate, carbon credits, treasuries, all moving onto blockchains. But what no one tells you is this. They won't use slow, expensive chains for this. Not at scale. Not with high gas fees and uncertain finality. They need speed. They need compliance. They need certainty. And Ripple has been setting this up for years. Here's what you need to know now. In June 2025, Ripple's $250 million acquisition of Medico put it at the heart of institutional custody for tokenized assets. A space BlackRock and Fidelity are now desperately racing into. The XRP ledger now has a proposed RWA tokenization standard, building on its native capabilities to issue assets directly on-chain with low fees and no gas wars. Financial institutions and governments are already running CBDC and RWA pilots on Ripple's dedicated private ledger. A clear signal of trust and technological superiority. Let that sink in. XRP's infrastructure isn't waiting to be adopted. It's already being quietly tested and integrated by the same banks that retail investors think are ignoring crypto. Clue number 3. Ripple's international dominance. A global empire built while the US slept. While the US tied Ripple down with lawsuits, Ripple did something genius. They went global and solidified their empire. Ripple has active CBDC partnerships and pilots in Bhutan, Palau, Colombia, Montenegro, Hong Kong, and more. They've expanded powerful payment corridors across Asia, the Middle East, Africa, and Latin America. Ripple's payment volume hit record highs during the SEC case, and the mainstream media barely reported it. Why does this matter? Because now that US regulatory clarity is on the horizon, Ripple will be positioned as the only US-based crypto company with pre-built global financial rails and compliant infrastructure. The rest will scramble. Ripple will already be live. Clue number 4. Ripple's quiet alignment with US power. Now here's the wild card no one's pricing in. Ripple is aligning itself with future US financial policy. Brad Garlinghouse has consistently stated that Ripple is ready to work with regulators. Ripple has former US Treasury officials and world economic leaders on its board and policy teams. They're actively engaging with lawmakers on bills like Fit 21 to position XRP as a critical bridge asset in a tokenized dollar future. With the post-election political landscape showing unprecedented bipartisan support for crypto legislation, XRP is now being quietly whispered about in Washington's digital asset working groups. Let me say that again. Ripple is already inside the room. The same way BlackRock positioned itself to dominate Bitcoin ETFs, Ripple is positioning XRP to be the core bridge asset for regulated digital settlement. And retail has no idea. The fuse is lit, the event is coming. This entire infrastructure, the payment corridors, the custody layers, the CBDC pilots, the enterprise rails, it's already live or in final testing. All it needs is one green light. Final resolution of the SEC remedies phase. A Ripple IPO announcement. A major bank going public with XRP-enabled settlement. The passage of major U.S. crypto legislation. Any one of those events would be enough. All of them together? That's a supercycle. And here's the part no one's ready for. The price won't rise slowly. It'll happen violently, because the infrastructure has been ready for years, and institutional liquidity will pour in the moment the gate opens. That's what you're holding right now. Not a hype coin. Not a gamble. You're holding a key piece of the new digital financial system, and when that system goes mainstream, XRP is no longer optional. It's necessary. The final catalyst. The institutional trigger is now imminent. Let's not sugarcoat this. We are now one event away from the XRP narrative going from suppressed asset to historic digital asset revaluation. And I'm going to walk you through exactly what that one event is, how close we are, and why it could trigger a tsunami of capital that forever changes XRP's trajectory. Because the market won't price this in until it happens. But when it does, there will be no going back. The event, Ripple's final U.S. clarity and the institutional trigger IPO, legislation, or both. Let's make it clear. There are 3 versions of this one event, and any single one of them could be enough to launch XRP into a utility-driven supercycle. But if they all happen together, game over. Scenario 1. A Ripple IPO announcement. Ripple has already confirmed it's exploring going public. Brad Garlinghouse said it would happen after the SEC drama is resolved. Well, the core legal drama is over. The final stage is determining penalties for past institutional sales. A matter of when, not if. A Ripple IPO announcement, now more likely than ever, would give Ripple a multi-billion-dollar valuation overnight. Cement its legitimacy in the eyes of TradFi. Force U.S. institutions that buy the stock to understand and reevaluate XRP. Pull Ripple into ETF and pension fund exposure cycles. But here's the part the media ignores. An IPO forces institutions to learn what Ripple actually does, and they'll see that XRP isn't a speculative token. It's infrastructure. It's the bridge behind a multi-trillion-dollar financial upgrade, and that kind of narrative changes everything. Suddenly, the world's financial elite are no longer betting on a crypto coin. They're allocating to rails, to clearance, to instant settlement. That demands XRP. Scenario 2. U.S. crypto legislation passes. The FIT21 effect. With Congress finally moving on digital asset legislation, the Financial Innovation and Technology for the 21st Century Act, FIT21, has already passed the House with surprising bipartisan support. Even if it stalls or changes in the Senate, its momentum signals a massive shift. XRP's existing legal clarity gives it a head start most tokens wish they had. But if FIT21, or any other major framework, passes and XRP is officially outside the SEC's securities jurisdiction, that's the ultimate green light. Wall Street won't wait. Banks will move from internal RippleNet corridors to public XRP liquidity pools. Money market funds will reevaluate allocation strategies. Payment rails and CBDC pilots in the U.S. could start using XRP publicly. This isn't speculative. U.S. crypto legislation is closer than it's ever been. XRP is already compliant overseas. Ripple has deep political relationships. The moment the legal clarity is cemented in U.S. law, the dam breaks. Scenario 3. A major U.S. bank publicly admits it's using XRP. This one's the quiet killer. Behind the scenes, we know banks are using Ripple's technology. But most aren't admitting they're using XRP for liquidity. Why? Regulatory ambiguity. But that's fading fast. And when just one major U.S. bank, we're talking Citi, JP Morgan, Bank of America, openly states, "We're using XRP for real-time cross-border settlement," it's over. Here's what happens next. Media firestorm. Institutions panic buy to front-run what comes next. Retail rushes back in. On-chain liquidity demand spikes. Exchanges scramble to adjust pricing and supply. In short, XRP reprices not over months, but in days. Why this isn't just hype, it's market structure. Here's the part that gets ignored in all the speculation. XRP is unique among top tokens because of its ready-to-deploy financial infrastructure. It doesn't need vaporware. It doesn't need staking gimmicks. It just needs activation. The rails are live. The partners are real. The corridors are connected. The fuse is burning. And once that single event hits IPO, regulation, or public institutional use, the price won't just move because of hype. It'll move because of actual functional utility under institutional volume. Why this could happen before Christmas? Let's be brutally honest. 2024 was about political posturing and legal battles. 2025 is the year of deployment. And here's what we're already seeing in June 2025. Ripple has resumed U.S. expansion and is actively securing licenses state by state. Pro-crypto legislation is gaining real, bipartisan traction in Congress. Financial giants are entering tokenization through platforms. Ripple is tied into via Medico. XRP supply on exchanges is at multi-year lows, while off-exchange wallets are loading up. All we need now is the match, the moment, the event, and we could see XRP teleport into a new price tier with no resistance left. That's why this Christmas could look very different for XRP holders. Because if that one catalyst hits, the time to position is already over. The numbers don't lie. On-chain metrics are screaming incoming. You can ignore the headlines. You can scroll past the Twitter drama. But there's one thing you can't fake. On-chain truth. And right now, in the first half of 2025, XRP's on-chain metrics are doing something they haven't done in years. Smart money is moving. Liquidity is repositioning. And wallets that have been silent since 2017 are waking up. So if you're sitting there thinking, "I'll wait until something happens," let me warn you, something is already happening. XRP supply on exchanges is plummeting. Let's start with one of the loudest signals nobody's talking about. In the first half of 2025, XRP supply on centralized exchanges has continued its steep decline. Billions of dollars worth of XRP have moved into self-custody wallets. What does that tell you? Holders aren't selling. Whales are preparing for an event-driven breakout, not playing short-term games. A supply shock is being engineered right under everyone's noses. Historically, whenever XRP's exchange supply craters this fast, price volatility follows. This isn't just random traders. These are in-the-know entities, quietly accumulating while retail is distracted. Wallet growth is spiking, but it's not retail. Here's the next major clue. In May and early June 2025, active XRP wallets have shown significant growth. But here's the kicker. The largest increases aren't in wallets with $50 or $500 worth of XRP. They were in wallets holding $100,000 to $10 million plus. That's not influencers. That's not bored retail. That's funds, family offices, and institutional desks getting exposure before they have to explain why they missed it. On-chain transaction volume is climbing, but quietly. XRP's daily on-chain volume has remained robust, but it's not flashy, because it's efficient settlement, not DeFi hype or NFT spam. That's what makes it even more bullish. This isn't noise. It's clean, institutional-grade flow. And some corridors, particularly those in the Asia-Pacific and Middle East regions, are quietly ramping up cross-border volume using XRP liquidity pools. Smart money watch. Institutional custodians are ready. This is where it gets really wild. In the last 60 days, we've seen Fidelity Digital Assets and other major custodians expanding their token infrastructure, with updates directly referencing XRP compatibility for institutional clients. Medico, Ripple's Swiss institutional custody partner, being named as the back-end for at least 3 new banks entering tokenized settlement pilots. Ripple's own payment network expanding regionally, routing volume through new corridors that require XRP for real-time bridging. Big names are setting up the rails, but they're not tweeting about it, because that's not how institutions move. They front-run hype. They don't chase it. And if they're readying the infrastructure now, what do you think they expect by Christmas? The dry powder factor capital on the sidelines is ready to flood in. Want to know what really sends assets vertical? This capital that's ready but waiting, the dry powder held in hedge funds, trading desks, and wealth offices. Most institutions couldn't touch XRP with a 10-foot pole during the lawsuit. Now, with legal clarity established, they are just waiting for the final green light, a clear regulatory framework or an IPO to allocate. Once they can, billions are already earmarked. It won't be a slow drip. It'll be a flood. And when that happens, the first wave of price movement will shock the market. Because remember, the XRP market cap today is under $40 billion. But the payments and liquidity infrastructure it targets, that's a $10 to $15 trillion system. You do the math. The numbers don't lie. They're showing us the blueprint before the headlines catch up. The final math, what this means for your bag. All right, let's get real. All the infrastructure, all the signals, all the legal momentum, they're pointing to one thing. A single catalyst could flip XRP's switch. The millionaire math, what it would take. Let's say you hold 100,000 XRP. Right now, that's worth roughly $53,000 at current levels. Approximate 53 cents. Here's what happens at key price levels. At $1, that's $100,000. At $5 to $500,000. At $10, you're officially a millionaire. At $15 to $20, that's life-changing generational wealth territory. So what would it take for XRP to hit even $5 or $10? A total market cap of $275 to $550 billion. That's in the ballpark of where Ethereum has already been and is smaller than the valuation of single tech companies like Nvidia or Apple. And considering XRP's infrastructure play is targeting a $10T plus payments sector, that valuation doesn't sound so crazy anymore. If tokenized markets go live, $10 XRP becomes conservative. Ripple's partnerships aren't just for show. They're building rails for tokenized assets, trade finance, and CBDC interoperability. When that system goes live, it forces liquidity into the XRP ledger. We're not talking about speculation. We're talking about actual financial infrastructure forcing demand. So what's the event? Here's the punchline. This isn't about XRP going viral on TikTok. It's about a single institutional trigger or a legal finalization that unlocks the next chapter. Think, the SEC case concluding with a manageable final penalty. A Ripple IPO announcement in early 2026. Passage of a US crypto bill that gives XRP a clear lane. Any one of these could cause supply shock plus demand spike equals instant repricing. And if that happens before year-end, some XRP holders will wake up millionaires by Christmas. And most of the world still won't understand what just happened. And that's exactly why we track this daily. If you're tired of missing the moments that change everything, now's the time to lock in. Tap that subscribe button and turn on notifications because here we don't chase hype. We follow the money, the metrics, and the moves that matter. You won't want to miss what's coming next, especially with XRP's next phase loading in real time. The signs are clear. The numbers are undeniable. And the timeline is shorter than most think. This isn't just a price prediction. This is a thesis backed by data, money flow, infrastructure, and legal momentum. And whether XRP hits $5 or $15, one well-timed move could change your entire financial future. Christmas is closer than you think. And this time, the gift might be liquidity.